whenever a stock is getting close to lows, there's like a pull that happens. There's like a vacuum that happens around those lows. And so regardless of the wicks in that specific instance, there's kind of like a vacuum pulling it down. And not always. Sometimes it'll just go up and down, up and down. Sometimes it'll test lows and then immediately go back up and test highs. Like stocks want to test the highs and lows of a range. And what it really is about is like as a stock gets closer and closer to the top of the range, traders are more optimistic, right? So regardless of what's happening with the specific wicks, when we test the range, traders are anticipating the range to break, right? So it's like as we test these lows here on the SPY, traders are starting to anticipate that range breaking. They're shorting the bounces, they're covering their long positions, and that kind of vacuums it down to retest lows. Same thing here with like Redbox here. We move up to test highs. As we pull back, even though we get this big up wick, it's kind of like a vacuum bringing it back up to to test the high of the range break. Again, traders are just anticipating the range breaking. And so that's... Okay, team, so we are here for part 2 of the advanced VWAP concepts class. And again, in today's video, we're going to detail some of the nuance that help you trade the volume weighted average price successfully. I've been trading the VWAP for over 5 years now. It's my favorite indicator by far, in my opinion, in terms of edge and probabilities. And so again, in today's video, we're going to be detailing how you can have success trading the volume weighted average price. Now, the first thing that I really want to talk about in today's video is understanding the range of movement. And when I say the range of movement, what I'm specifically talking about is the range between the low of the day and the volume weighted average price. If you look at a stock that's trending in a specific direction using the VWAP here, you can see there's kind of this range of movement where the stock goes up, tests the VWAP, comes down, hits the low of the day, bounces back up, kind of gets close to the volume weighted average price, back down, back up, back down. And you can see there's a range of movement that you're really supposed to attack with the volume weighted average price. And so in this case, it's a downward trend, and so you would be shorting this direction until the break over the volume weighted average price happens. And so really, it's not always going to trend in a specific direction over or under the VWAP, but your goal is to attack that range while it's happening. Something else to understand here is that once it just starts to even test the volume weighted average price level, once it breaks over the VWAP at all, that usually means that a high edge is not there for VWAP trading. And so even if it starts to test that level, traders start to lose confidence even if it comes right back down immediately. And so if you're just trying to trade the trend and not trying to trade really specific momentum, a lot of the time if you start to see it even test the VWAP, you want to slow down with your trading. Now again, if you're attacking momentum and you want to attack a big rejection under the VWAP after testing it, that's fine, but that generally needs to be a very short-term trade. If you're attacking a longer range, even if it starts to test the VWAP and comes right back down, it's usually not the best time to attack the downward direction in this specific instance. And you can see even after it tested it, it came back down initially, but then it kind of moved back up and down around the VWAP, and it was just a lot less favorable to attack a trend here after it started to test it. And so a really big sign that the trend might be breaking and that the favorable time for attacking that trend is over, look for it to just at least test the VWAP. Even if it doesn't hold, it usually means that the momentum in that direction is slowing down some. We can look at an example of this on the upward side as well. Again, you can see a big move over VWAP, and again, as it's trending here, you can see the kind of range between the high and lows of the day. In this case, it's between the highs of the day and the volume weighted average price. As it's ranging up there, you can attack that upward trend until it really breaks under the VWAP. With all of that said, this brings me to the next part of the class here, which is the vacuum of highs and lows of the day. And now what I'm trying to say here is, like, when momentum occurs, stocks naturally pivot between high and low of the day areas. And so with that, as a stock starts to approach those high and low of the day levels, traders gain confidence or lose it depending on if it's long or short, and this kind of causes this pull towards these high and low of the day areas. And this kind of correlates with what I was just saying here. So if we look at this area, for instance, you can see as this low of the day level hits, it kind of bounces back up, but there's kind of a vacuum. Like once we break lows, stocks generally want to move in that range and move back down to test those lows again, and they bounce back up, and then they move back down to test those lows again, and then they bounce back up and move back down, and they'll continue in kind of this vacuum towards the low of the day, generally speaking, until that range breaks, either on the upside or downside. And so in this situation, you can see the range here, and it will continue to trend in this sideways range, kind of vacuuming towards the low of the day until it actually breaks those lows, or it starts to move back up to test the volume weighted average price. If it stays in that range, again, I love just kind of attacking the top of the range, shorting it, and then covering towards the bottom, attacking the top of the range, shorting it, covering it towards the bottom, and I'll do that until the range breaks on the upside or the downside in this specific case. If we look at an example on the long side as well, you can see the exact same thing. You can kind of see as the stock starts to move here, it's forming a range between the volume weighted average price and that previous high of the day, and I'll continue to attack that range, which means I buy it towards the volume weighted average price on these pullbacks, and then I cover towards the highs, buy it on the pullbacks, cover towards the highs, and again, I'll continue to do that until it breaks under the volume weighted average price, and in that situation, I'll just withhold my trading. I'll completely stop trading as it's close to the VWAP or underneath the volume weighted average price, and then if it starts to really break down and test that next opening range low right here that you can see at this specific candle, this big long wick right here, if it starts to test that, that's the green light to attack shorts in that situation. Now I want to talk about a concept that I explained to my wife Carol as she was learning to trade, and it's a really important concept in understanding and successfully attacking momentum. Wicks equal high probability momentum. And so when I say this, you can use the candle wicks and the candle movement to identify momentum really easily by analyzing and being prepared to attack these up wicks or down wicks. In the example we have on this page, you can see we have down wicks forming right around the VWAP. If a stock pulls back to the volume weighted average price and forms a wick, that is usually a pretty good sign to buy it up, and the probabilities are pretty high that the stock is going to at least move back up to the top of the range when you see these candle wicks. Now remember, nothing is 100% in trading, and so I can't guarantee it's going to work. It's not going to work every time, but again, it's just a high probability setup. And it kind of makes sense because if we have a down wick, the likelihood that we're going to go up and test the top of the range is pretty high, because to have these down wicks here, just to form these candle wicks, that means that the candle was down towards the VWAP and then immediately and suddenly got pushed back up. And so that's the psychology of these wicks here. And so again, you can understand why a down wick in this situation would equal buying pressure coming in and is a good indicator that the stock might move up to test the high of the range or test the upper part of the range there. And a up wick is indicative of selling pressure. And so if a stock has a really big up wick, that means that the candle went all the way to the top of the range and then immediately and quickly got rejected back down, thus forming that wick. And so you can use these wicks to identify momentum, and they are some of my most profitable trades and the trades I'm the most confident in, especially if you can attack a VWAP bounce or something that pulls back to the VWAP, like this specific example that forms a wick around the VWAP. Again, just a really easy range trade to buy it up at the bottom of the range and sell it at the top, and this is something that you'll see me do pretty consistently in my trading as well. Something else to understand here is that when we're using wicks to identify momentum, I specifically only take trades in the current trend direction. I never trade counter trend, and so if the stock is above the VWAP, I'm not going to short it if it has an up wick, and if the stock is below VWAP trending down, I'm not going to go long on a down wick either. So I'm not going to trade against the trend. Like I said before in the video, stocks generally like to pivot between highs of the day in the VWAP area and lows of the day in the VWAP area, kind of like a vacuum, and so we're not going to go against that. We're going to try to ride the momentum in the most effective way. Anyways, team, that's it for part 2 of our advanced VWAP concepts class. I hope you learned a little bit, and if you have any questions, let me know right now in the comments below. As always, you can see me day trade, swing trade, and invest these type of VWAP strategies completely live on stream for free right here on YouTube every single weekday morning, starting at 6:30 in the morning market time. You can hang out with us, watch us trade the open with a $120,000 buying power account, and we do it live again every day for free. Here at this channel, we don't sell anything, we don't charge for anything, we give everything away for free without claiming to be experts. And so as always, remember, we are not investment professionals and we are not liable for losses. Always make your own assessment of the market and trade responsibly. Good luck. We'll see you all next time.